Why does long-term capital still choose the Middle East? One question I've been asked repeatedly recently is, with geopolitical tensions in the Middle East, why are long-term investors still choosing the region? If you only follow the headlines, you might assume that capital is pulling out. But if you look at what major institutions have actually been doing over the past few months, you'll notice a much more nuanced picture. Short-term capital may be waiting on the sidelines, but long-term capital has not stopped investing. Take a few recent examples. In April, Bain Capital established an office in Abu Dhabi Global Market, ADGM, reinforcing its long-term commitment to the region. Around the same time, Barings also expanded its presence in Abu Dhabi. These are not speculative moves, they are long-term strategic investments by global asset managers. State Street, one of the world's largest financial institutions, continues to move forward with its new operations center in Al Ain, UAE. Partners Capital has also opened an office in Abu Dhabi, stating that its investment thesis is based on the region's long-term growth potential rather than short-term geopolitical events. In Dubai, DIFC is now home to more than 100 hedge funds and over 500 wealth and asset management firms. UBS is also expanding its Middle East trading business with the ambition of becoming one of the region's leading equity trading platforms. So the real question isn't whether the conflict has had an impact. Of course it has. Markets become more volatile, investors become more cautious. Tourism, retail, IPO activity, and some new investment projects inevitably slow down. The Dubai government has also introduced business support measures to help maintain market confidence, acknowledging that these risks are real. But the more interesting question is, why haven't these long-term institutions left? I believe there are three fundamental reasons. First, long-term capital invests in decades, not headlines. The Middle East sits at the intersection of Asia, Europe, and Africa, making it one of the world's most important hubs for trade, finance, logistics, and talent. Second, capital doesn't seek absolute safety, it seeks relative certainty. Stable institutions, transparent regulation, predictable tax policies, open financial markets, and access to global talent matter far more than a single news cycle. Third, the Middle East is not only a destination for capital, it is also one of the world's largest sources of capital. Sovereign wealth funds in Abu Dhabi, Saudi Arabia, and Qatar manage trillions of dollars in global assets. For many international financial institutions, establishing a presence here is not simply about investing in the region, it's about building long-term relationships with the capital that originates from it. In my view, geopolitical events don't eliminate long-term opportunities. Instead, they accelerate one important process. They force capital to distinguish between short-term noise and long-term structural value. That's exactly why I created Serena's Middle East Business Notes. My goal isn't to tell people whether the Middle East is good or bad. Instead, I want to explore a more important question. Why does capital choose one place over another? Because in the long run, capital often tells us more about the future than headlines ever will.